Today I am going to present lecture on accounting. That is the first chapter of IGCSE O-level Cambridge accounting. And here we start. First, we have to discuss the what are our learning objectives, and we have to learn about what is bookkeeping and what is accounting. We will learn that purpose of measuring profit and loss. We will also learn the role of accounting in providing information and monitoring progress of businesses and decision making. And then we will learn the meaning of assets, liabilities, and honor equity. And then we will learn accounting equations, and then the statement of financial position and liabilities on specific dates. So first of all, the learning new terms is much more important, and the key terms are bookkeeping and accounting and statement of financial positions. Bookkeeping is the detailed recording of all the financial transaction of a business. For example, you see when you go to your bank statement, and then there is a recording of every transaction. It's like that. Bookkeeping is like that, but not transaction statement is different. Okay, and accounting is using bookkeeping and record to prepare financial statements and that assist in decision making. And basically, it revolves around decision making and making financial statements from the bookkeeping. For example, bookkeeping provide the raw data, and the accounting is analysis of the raw data for the decisions. And financial statement is a kind of analysis of the raw data that is in the bookkeeping. And statement of financial position, it shows the assets and liabilities of a business on a certain date. So certain date is the key terms. And accounting uses again it's a very different perspective, the definition. Accounting uses the bookkeeping records to prepare financial statement at regular intervals. Now, and again, few terms. Income statement. What is income statement? Calculation of the profit or the loss earned by the business. That is income statement. And financial statements. It is often a collective name for an income statement and a statement of financial position. Okay, so financial statement include income statement and position statement, financial position statement. And the income statement is calculation of profit and loss earned by the business. And again, few terms. Capital. Capital is the total resources provided by the owner and represent what the business owes the owner. Okay, it is the owner, provided by the owner. Okay, liability represent anything owed by the business, or it's a loans or everything you have to give to the society, that is liabilities. And asset represent anything owed by or owing to the business. Business set up and operated by one person are known as sole traders. So the accounting equation, basically assets is equal to capital plus liabilities. Assets is also called capital is owner's equity and plus liabilities. The statement of financial position at any time, and balancing of accounting equation at any given transaction. So that is statement of financial position. For example, January 1, Lena set up a business to trade under the name of the dress shop. She opened a business account and paid in 20,000 as capital. The business purchased premises $15,000 and paid by the check. The business purchased goods 3,000 on credit. It's the key term. The business sold goods at the cost price of $1,000 on credit. It's a key term. Show the counting equation after each of the above transaction. So this side of equation, the asset must be equal to capital plus liabilities in all at all times. For example, at January 1, she has a 20,000, so that is the asset. So asset in the bank is equal to capital, there is no liability. And January 2, she started working, she bought premises of 15,000. Okay, and now she has 5,000 in the banks, so total is 20,000, and that is equal to the capital of the business. Now on January 3, she still has a premises of 15,000, and now she bought inventory of 3,000 on credit, so his asset is increased to 3,000. She has 5,000 in the bank, so her assets are 23,000 now. But on the other hand, initial capital or owner equity was 20,000, and what increased his assets is the liabilities, because she trade payable, she has to pay $3,000 which she bought. So 3,000 are his trade payable. On January 4, she has to pay, she has a premises of 15,000 and inventory 2,000 and trade receivable 1,000. She sold the things on credit. So because she has to receive, so that's why this 1,000 is on the asset side, and 5,000, she has 5,000 in the banks. This 1,000 is decreased because she has given these things on to someone, but 2,000 is the, initially it was 3,000, now it's decreased to 2,000 because inventory is sold, and it will not register in the inventory, but it will register as a trade receivable, because this is not in her possession now, but she has to receive the this 1,000. So total is 23,000, and here she has not paid the loan, she received goods of 3,000, so still, so total 23,000 here, and 20 plus 23,000, so both sides must be balanced in all ways. Now you have to define the term bookkeeping. Okay, you have learned what is bookkeeping. The bookkeeping is detailed record keeping of every transaction of the business, and the accounting is the making financial statements using that record, and then decision making is accounting. State 2, reason why it is necessary to prepare financial statement at regular interval, because you have to calculate the profit and the loss, you have to make decisions, that's why much important. State what is included in term financial statements. Okay, so you have to define these things. So summary of this chapter is what is bookkeeping. Bookkeeping is detailed record keeping of all financial transaction of a business, and accounting uses these bookkeeping records to prepare financial statements. It is necessary to prepare financial statement to show the profit or the loss of the business and the financial position of the business, and to help in decision making. The accounting equation shows that assets are always equal to the financial, always equal to the capital plus the liabilities. Okay, this is the key in in rest of the chapter. In rest of all the numerical problem you have to solve. A statement of financial position shows the asset and liability on a certain date. So another thing is my opinion, the asset must, we can also understand from the accounting, if it becomes more humans, honor equity plus social equity we can also say, because you have to take loans from the market or to give things to the you can also sell your shares in the market, so you collect money from the market. This is also kind of a social equity, so public equity. So Test yourself. Fill in the missing figures in the following tables. Assets must be equal to capital plus liabilities. So 35,000 are the assets, and 12,500 are the liability. So the capital equal to 35,000 minus 12,500 at any given time. So the assets here must be equal to, in the B, capital plus liabilities, and here asset must be equal to capital plus liabilities. So the next is we are going to learn. We are going to solve few exam style numerical problems. Okay. So question 1, which task is performed by a bookkeeper? Analyzing the trading result? No. Entering the transaction in the ledger? Yes. Preparing year-end financial statement? No. Providing the information for decision making? No. A trade provided the following information. Okay. A trade provided the following information. Premises 180,000. Inventory 23,000. Okay. Trade payable 26,000. Trade receivable 21,710. Office fixture and fittings, loan from banks, cash at bank, motor vehicle. So you have to calculate the assets. Okay, we already learned that assets are, what are assets? Premises plus inventory plus trade receivable plus fixture fitting, office things, fixture fitting. Okay, cash at bank. Okay, motor vehicles. These all are assets. So you have just to calculate the asset, you have to just add these things to premises, inventory, and trade receivable, office loan from the bank. This is also asset as well as liability, cash at bank, and motor vehicles. So these are the assets. Calculate the value of the liabilities. Okay, so liabilities I will show with the red. Liabilities, trade payable, we have to add, okay, 26,180. Loan from bank, this is also a liability, so just we have to add these things. Okay, use the accounting equation to calculate the traders capital. Okay, so capital is initially premises. She bought premises from this capital, and inventory, she also bought inventory. Possibly she bought inventory from her capital, so this inventory may also. Office fixture and fittings, she possibly bought from her so this is also capital. And loan from bank is not a capital. Cash at bank, yes, it is a capital. Motor vehicle, yes, it is capital. So we can just add up these things to calculate the capital. Okay, the next question 3. What is the statement of financial position? Statement of financial position. A list of a calculation amount owed to the owner of the business. No. A list of assets and liabilities of business on certain date. Yes, this is. A business had $9,420 in the bank account. The following transaction took place. Okay, bought goods on credit 250, sold goods on credit 1100, repaid a loan by check 5,000. Okay, how much was there in the bank after these transactions? Okay, so in 9,400 she has a in the bank. So bought goods on credit, so this will not go anywhere. Sold goods on credit, okay, this will also will not affect these two terms will not affect the bank amount. Repaid loan by check, so only this will affect. So is it 4,420? B. And the next is the question 5. Complete the following table to show the effect of each of the following transaction. The first one has been completed as an example. Okay, bought a motor vehicle and paid by check. Asset, liabilities. Okay, effect on liabilities, effects on assets. Bought a motor vehicle and paid by check. Asset बन गया, asset motor vehicle. Asset increase. Okay, bank money is decrease. Liabilities, no, there is no effect on liabilities. Okay, bought a goods on credit from a credit supplier. Okay, asset has increased. Liability also increase. Liability also increase. Goods. Receive a check from a credit customer. Okay, asset, check. Asset has increased. No effect on liabilities. No, okay. Asset, no effect on asset. This C, no effect on asset, because check is already is registered in the asset. Okay, just his the nature of the asset is changed. Now it's initially it was registered as a receivable, and now it will be registered as a bank account amount. Sold goods on credit. Okay, goods. Inventory will decrease. decrease, and so asset will decrease. Sold and liability, no effect. Paid off in a loan, in a cash loan, asset will decrease, and liabilities will also decrease. Okay. October, Bharwani trader has the following financial position, statement of financial position. They have a machinery of 19,000, 6,000 motor vehicle, 49 inventory, trade receivable 3,000, banks 10,000, total 4,300, and capital is 3,500, and trade payable is 8,000. Now after following transactions, what will be the financial position statement on November 1? Okay, so check for 30,000 was paid to credit supplier, so his 3,000 trade payable will be reduced, and his bank account will be decreased by 3,000. A credit customer pay 500 in cash. Okay, so his trade receivable will be reduced by 500, but his bank account will increase by 500. There will be no impact on liabilities. A loan for 8,000 was received from lenders, so his 8,000 account will increase, but his liabilities will also increase 8,000. A check for 7,000 was paid for additional machine. Okay, so they bought inventory of 7,000, but his bank account will also decrease by 7,000. Okay, now if we have to add both sides, and both sides must be equal to 4,800, so both sides are equal.